How about if we try that one? Okay. Okay, let's just unplug this one. Now then, I don't know if that's any better. Can you still hear me now? Or is it, I might have to restart again as well. I've got the audio coming from the camera now. It may not be too clever, but can you hear me, Taipei? Please let me know. So as I was saying, we still got, still no sound, Nabil saying clear voice. Okay. It may be too clever because it's come from the camera on my laptop. So I'll keep going. Obviously, guys on YouTube can hear me, so I'll keep going. Thanks for that, Nabil. So what I was saying, we're here now at the end of the third week of June. We've had a very busy week. We've got Bank of England. I can hear you. Right, very good. Obviously, it was the other microphone I was using. So we've had the Bank of England, the Bank of Switzerland yesterday, Swiss National Bank yesterday. Sterling's under some clear pressure today as well. We've had a fairly quiet session so far today, but it's suddenly kicked into life in the last hour or so. We've had some strong retail sales figures out of Australia this morning, also from the UK. However, we've got a weak Canadian retail sales data that's just come out, so that's hit the Canadian dollar. So, as usual with these sessions, if there's anything you want me to have a look at in particular, please let me know. Other than that, we'll go through the main crosses, probably the ones that most of you trade. But before we get going, people keep asking me about trading books, and I just brought some down off my desk from upstairs in my little office. And in no particular order, I've just got picked up 4, basically. Louise will come to gold, 4 hour and daily, certainly. But I say, some people keep asking me about trading books. And during the lockdown, obviously, there's more time to do things. I've finished, let me just go through things. One of my one of the key books you all should have. We did a webinar on this a couple of months ago. Trading in the Zone by Mark Douglas. Can you see the guy's name there? Mark Douglas. Trading in the Zone. Everyone should either at least read this book, if not got a copy of it. Trading is all about psychology. It's all about understanding yourself. And Mark Douglas is Trading in the Zone is probably one of the, if not the best book on trading psychology. Another one I've picked up again recently is this. It's great story. Michael Cavell is a really good writer. He's wrote the very famous, and I brought that down with me as well, the trend following book as well. This one's a really good one as well. The story of the turtle traders. We'll do a webinar on this one day as well, because the story of the turtle traders, phenomenal story from the 1980s. Fascinating little book as well. Very well recommended as well. The Complete Turtle Trader. All about, as it says there, how 24 novice investors became overnight millionaires. Well, they didn't become millionaires overnight. It took them, it was the best part of 4 years, but they took his own money. This guy invested in them. They took his money and they made millions from it. And they're still trading today, many of them. Great story. The guy that wrote that book, a guy called Michael Cavell, wrote a very substantial, there's a lot of repetition in here, but it's a really good trend following book. So any trend traders out there, I can recommend this one as well. Michael Cavell's trend following book. It's a bit of a beast of a hardback, £30 odd, I think, last copy of this I bought. And then another book I got at Christmas, which has been a fascinating read, as much to do about people and running businesses, as well as trading, and the story of the quant revolution, the story of Jim Simmons. Again, there we go. You can see the man who sold the market, how Jim Simmons launched the quant revolution. If you don't know who Jim Simons is, sorry, not Simmons, Simons, have a look at it. Have a dig up for this book, written by Gregory Zuckerman. He's written some other good trading books. He's a journalist at the Wall Street Journal. But 4 books just off my trading shelf I brought down, because people keep asking me about trading books. Okay, no, in no particular order, but it's all well worth reading and certainly well worth owning. Some little books there. So anyway, let's get going. Let's have a look. Somebody's still saying they can't hear me. That's a bit of a shame. I can hear you, I can't hear you. Bella, I'm sorry about that, but lots of other people can. Try reconnecting, Bella. Sorry. Right, let's have a look. Let's have a look what we're looking at. Let's bring up some charts, okay? So let's have a look at the charts today. So share our chart, shall we? Okay, so first up was let's have a look. Where were we? No sound, no sound, no sound. So Luis was asking about gold on the daily and the 4 hour. So let's have a look at gold. Gold's had a good day today. So gold on the 4 hour chart continues to accrue. Here's the 1 hour chart moving up. 4 hour remains relatively robust as well. So we've been tilting through this key 1725 level all week. It's a key daily support level and resistance level. So we broke it a few times during the week. Here on the 4 hour time frame, this takes us back to the 5th of June, this line here. Okay, so we're going back more than all of this week and last week. So here, beginning of the week, we're moving forward. So again, it's a bit channel bound. It's not really trending, but for a 4 hour trader, we've got key support here at 1720, which is our 200 period moving average here, which we've pierced twice, 3 times in the last couple of weeks. And we tested it again yesterday. Big volatile day yesterday. We went from 1737 all the way up there, all the way down to 1717. But today's been a bit more stable. We've moved up quite nicely. 4 consecutive candles to the upside here now. So we're running to R1. We've already tested R1 on the gold chart here at 1733. So that's looking at a relatively strong close to the week. Resistance, immediate resistance, obviously this R1 level, and now above that was yesterday's 1737, which we've already tested again today. So that suggests we might come back down from there, and then above that would be 1741 for 4 hour traders. So that's remained relatively robust, having broken out of this channel area here, this top here in the last candle. So we see where we finish the market today. Remember, there's only a couple of candles left in the week for 4 hour traders before the gold market closes today. Stochastics moving to the upside. MACD not doing a great deal, but still positive over the 0 line. The signal line, I'm going to try and raise that up for you. I can't make that any bigger. You can see the histograms are very flat as we've gone flat through here and ticked up here as we've moved up a tad. So key resistance is that R1 level there. 1735 on the 4 hour chart, Louise. On the daily chart, the higher time frame, again, it's really in this sort of channel area. If you zoom this up, so we're in the top half of the channel. So the channel really is key support through June has been the key psychological 1700 flat round number here, which we've held for most part of. I wonder why it does that. Sorry, I just lost my VPN connection, so hopefully you guys are still there. Above 1725, and then we're capped here at 1745. See, we haven't been able to close over 1745 during or even intraday during June. Before at the end of May, we got to 1763 and 1750. So the daily close high we've had for June is here at 1738. So that's a key level again that we're approaching today. So 1738, and the daily remains relatively well bid, just about over this 20-day moving average, but not trending really sideways action for the last 1, 2, 3, 4, 5, 6, 7, 8 days here. So we're waiting for some more direction on daily time frames for those gold markets. So let's have a look. What else have we got here? Other people can say they can see it, so that's good. So let's have a look. Sharon's asking the Swissy against the yen. That's an interesting pair. Tends not to move around a great deal, but let's have a look at the Swissy against the yen. Both of them safe haven currencies. The yen a bit more than the Swiss franc. Obviously, this week we've had, as I said earlier, we've had the Swiss National Bank openly saying they interfere. Oh, interfere is the wrong word, but they will support the Swiss franc or sell the Swiss franc as they deem fit, and we see that in the markets as they move around. So, Swissy, where are we? Swiss franc here. So, Swiss franc, Swiss yen on the daily time frame here. Bit of we've got a white chart. We've got a white chart, black chart there. Anyway, so here daily time frame, we've had a nice rally, big significant rally in fact from these lows beginning of May all the way to 114. So we're all the way down here in the middle at the beginning of May, down at 108. So we've rallied very, very significantly through the 20-day moving average, through the 200-day moving, and through the 50-day moving average. So what's a concern for me as a trend following trader is that we got this 250 period moving average here just coalescing together. That's not giving us any clear direction, other than a big fat support zone down here at which is now, well, we're above 111, so about 111.20, 111.30 is big fat support zone. The daily time frames continue to rally, went to 114, and we've rolled over this week, last week, and we've started to move down. So on the daily time frame yesterday, this would have triggered or suggested a bit of weakness coming on, because we closed. It wasn't a significant close, but we did close under the 20-day moving average, the midpoint of the Bollinger Bands here. So we rallied to the edge of the Bollinger Band, ran out of steam at the psychological round number 114.00, and then we've drifted down last week and into this week, and now finally breached the 20-day moving average. So here we've got a significant sort of downtrend that's started to develop here now. A little channel forming. If I just stick that on there, you can see the bottom of the wicks through here. So we've got a little channel moving down here, and that's our first big break under the 20-day. So where will we go, or could we go from here? Well, if we don't break back over the 20-day moving average and back out the top of the channel here, we could easily test that. Next support, or next level, is the S1 level there at 112 itself. So here we are at 112.52. So 112.00, the flat round number is the next support area. Then below that, we've got S2 at 111.70, and then S3, and this big fat support here, as we mentioned earlier, at 111.30 zone. So three key levels for this to perhaps move down to. If this break of the 20-day doesn't happen, and we consolidate around the 112 area, we need to break back over R1, which is where our downtrend line is, there at 112.82, and then where is today's R2 level, which sits at 113.25. So downtrend looks like it may be developing and gaining momentum. Where we get that from? Well, the RSI is starting to slip here at 52. It's neutral. It's not really telling us very much. The ADX is still relatively positive at 20. I don't know what the ADX may have 22. So that's still trending relatively strongly. That's what that's telling us. An ADX level over 20 suggests a relatively strong trend. So it doesn't matter whether it's going up or down. Basically, the trend was getting stronger as we got up here. As you see, we rolled over. The strength of the trend started to move down, but the trend is still strong because we're above we're above 20. Sorry, that's what I was trying to say. So we're trending or moving lower here on that daily time frame, Sergio. So still strong. If you're interested in lower time frames, I don't know if you are. You didn't actually put the time frame on there, Sergio, unless you have later. But let's get going. So daily's down. The weekly has started to move down as well last week. Although it's the weekly time frame, as you can see, 3-4 strong levels to the upside on the weekly time, and that remains relatively strong. Still, ran to that one point. Although we moved down last week, we were down this week. So this week's candle is make a decision as a weekend of week trading. This week is not there, but you can see big move down from last week. Cool, significantly this week, but so still that's the monthly, the high time frame is really flat. So not really telling you very much. So daily 4 hours probably down a bit more aggressively. Well, there we go. Yellow lines are our daily channel. So there we go. See how we got close to the channel back down. So the 4 hour again is moving down. The 4 hour continues to rise over the 20-day moving average. The same part. See. 4 hour fixed that much more easily, and 4 hours got that 200 period at 112 at the S1 level as well. But again, another one that's over 20-day moving average and in the lower half of the benchmark. So again, 4 hours trending lower, and 1 hour probably more aggressive. But yeah, 50. It's bounced up a wee bit, but again, another one that's trending lower. So again, it started to down significantly yesterday, Sergio. That's answered your question. Next one up is had all your quality, says Kim. Oh dear, why is the... I'm going to restart. The audio's broken down. I've lost my VPN connection. Let me try and reconnect, okay? So I'm going to stop it again. We're going to start it again. And then resume the game. Sorry, Kate, have a look at this one. We'll come back. USD, yeah, just brought the follow edge indeed. Maybe Kingsley, maybe not Kingsley, but certainly it's moving down. So I'm going to finish it and I'm going to reconnect again. I'm reconnected to my VPN. I idea why the VPN is disconnected, but that might be one of the reasons the video is not great. Okay, so we'll be back in a minute, guys. Sorry about all this.